Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 3rd of October, 2019. This is episode number 1609. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, we're going to need to dig right in here. Today, the markets are showing a mixed overall sentiment. The markets have dropped quite a bit over the last 2 days, and this looks like we're taking a break. The overnight session shows that we traded inside in a somewhat skewed profile, but overall the market is mixed. The Russell's unchanged on the session. The pound is higher. The Bund is higher, so there's a slight, just an ever so slight skew towards safety. The Nasdaq's up 8.25 points. The S&P is up 2.25 points. Crude is off 64 cents, trading at 52, down 1.22%. DAX is off 32.5 points or 0.27%. So, and gold is pretty much unchanged. So overall, it's really a kind of a the market's putting on a more of a resting stance right now. But of course, we don't want to impose what we think upon it. We want to have an idea of what may be happening, what our bias may be for the session, and then let the market tell us what it really wants to do. Yesterday was an open drive down in the ES, and it traded just as we would expect an open drive to trade. In terms of the theme for today, it's more of the same. The market is still uh, tiptoeing around numbers that may indicate that the global economy is finally dragging the U.S. down, and therefore the U.S. is dragging the global economy down. And this is how corrections happen. It's a bit of a cycle that's difficult to break, and this is when central banks step in and kind of tame the selling and maybe do some buying and so on. But overall, there's a battle over Brexit in Europe ongoing. They think they might have a Brexit deal with some provisions for Ireland and so on. There's a lot of stuff coming out on the wires on that, but all in all, it's pretty much a day where the market is standing by to digest what has happened over the last couple of days. So that's where we stand in terms of what's ahead of us. We did get some numbers this morning. We got a whole bunch from Europe. Nothing major. Market PMI, market services PMI, retail sales out of the EU. Um, but we're looking for market composite PMI and ISM non-manufacturing PMI. We have to pay attention now. The ISM manufacturing PMI has triggered off the selling on Monday. Non-manufacturing PMI comes out at the same time at 10 o'clock Eastern, 9 Central, 3 p.m. GMT, and we're expecting 55, which is expansionary. We'll see how it looks once it comes out. Um, and we'll go from there. The rest of it is we do have a bunch of Fed speakers today scheduled. We'll see how that plays out. Let's take a look at what we expected yesterday versus what we got. Here we go on our review segment. Actually, that's not the right monitor. Boom. I messed up my monitors here. Here's what was expected yesterday. First scenario, expected the market. We had a gap down, expected the market to make an attempt higher, but for that weak low from the overnight session, which I talked about, to be taken out and for us to break lower before making an attempt and being responsive. I saw Monday as an impulsive day down. I saw Monday as a high probability continuation day before, when it closed. We ended up opening in a gap down. So my expectation is it's likely to stabilize. It's likely to stabilize and make an attempt at returning back to the most recent range. The secondary is completely responsive. That's normal behavior, auction behavior in the sense that overall, yes, we broke the one-time framing up, but overall, we've been buying bounces as part of the auction. The third scenario, which is basically what played out, I expected an open test up, drive down, and my expectation was 28.9275. Um, 28.89 as the bounce area, and the market actually did not do that. It ended up pushing right through to 29.74. Here's what actually happened. Look at that open drive, just immediate selling. You can see the open and the high are just within 2 ticks of each other. Immediate selling. We can see volume is relatively high, almost doubling what we would normally get in the first 15 minutes. This is the kind of trading that we do not fade. We do not want to go against this, and I mentioned it several times in the Convergent chat room. Hopefully, members were listening and did not donate their hard-earned cash to the market by trying to buy various levels or points where they think a bottom has been reached. And you'll note that the market stayed well below mid. It tangled with VWAP a little bit in the afternoon, but it stayed well below mid, and the overall balance kept shifting down, shifting down, shifting down until later in the afternoon. We had a point of control down here, uh, actually up here, down here, and then we ended up finishing in the middle. The market seems to have found its footing between 2880 and 2895, and essentially has held that in the overnight session. It seems to be finding good balance right here, right now, where we're trading, right in the meat of the profile. In terms of what we've got, where are we? No, this what is this? This is the composite. In terms of where we are in the big picture, surprising yesterday, it did not hold. The point of control is above us. This was my target from Monday. If you recall, I talked about that yesterday. I won't harp on that today. But I did expect that at least down here, we would get some support in the 28.95 area. Now, it acted as resistance on the way up, on the pullback yesterday before the close, but it really pushed through some key areas, pushed through some key high volume nodes, and has pushed through this low volume node to finish on the lower high volume node of the balance that we had in the month of August. This balance started at the beginning of the month of August and ended at the beginning of the month of September. And in the month of September, bounced up high, and now October appears to be trading back in August range. So we have quite a bit to go through here. I know it looks like and it's acting like the world's coming to an end. We've seen this multiple times. But overall, the damage, big picture damage to the buyers is not that significant. The bulls are not vanquished yet. So don't get ahead of yourself, and of course, try to avoid buying into the hype of this is it, this is the big one, this is that. It may be, I don't know, but to me, I'm always comparing the action with the overall picture. So we need to step back, look at our weeklies, look at our dailies, and see where we are, so that we don't get sucked up into this frenzy of get short, sell calls, buy puts, whatever. Because overall, I think we're just we this is has been a very typical um, rotation down for this product. So the overnight session, if you look at this, 312 contracts traded. The volume is relatively high overnight, so I expect a little bit of a fair amount of activity today. But the profile shows a very weak high, a relatively weak low, and a very balanced overnight session. In contrast, yesterday had a pretty good balance at the low of Tuesday, and then we ended up shifting down during the session to sell off some more with the European Open to end up opening right in the gap. But contrast that with today's overnight session, we're quite in balance. My expectation for today, the main expectation for today is, guess what? This is another impulse here on the day session, just like this was an impulse. The expectation is we're likely to take out this low and probe underneath at 28.74, but we're also likely to stabilize today. So that's what I'm looking at. Let's take a look at what's expected. Bada bing. Let's see what it pulls up. This is, yep, looks like I really need to fix my desktops here. Here's what I'm expecting. Oh, by the way, let's take a look at Bookmap, CT Bookmap for a minute. Let's take a look at the full feed. And see where we are in the overnight session, what we've done so far. So you can see it's quite spotty. The liquidity is quite spotty all over the place. It's a lot of sparkles everywhere, is I guess what I would call it. Um, we do have some liquidity at the low. It's been there before the low came in, but notice that the liquidity increased as prices went up and then decreased as prices moved lower to the point that it actually went blue. I believe this liquidity at the low is BS. It's not likely to stick around. But we do have a wall of liquidity down at 28.74, yesterday's low, that just started recently. Let's zoom out a little bit more to see what we've got. Look at that liquidity down there. Woof, right? Um, this is really this is really fat here. It'll be interesting to see what happens. Above us, 28.95 makes sense. This liquidity that's been here all night makes sense above. And then, of course, the 900 makes sense to me above. I expect that to actually trade out or to act as resistance. This liquidity down here is questionable. Beneath there, we have 28.66 as a liquidity center for the market. Okay. Again, let me pull up what's expected for today. What are we looking at? We're looking at a market that had two impulsive days in a row, two trend days in a row. The probability of two trend days in a row in this product over a large sample, which is about 5,000 days, is quite low, but here it is. It happened. The probability of three trend days in a row, it goes back to 2009, and that was a bona fide correction. This morning, I'm expecting, as a primary scenario, I'm expecting an open auction. Do you guys hear that news feed? I don't know if that's noisy for you. Um, I'm expecting an open auction here that attempts higher, but likely to push down. I'm looking for this 28.74 to come down here and test and then push back up. I expect it to push back up into the range and give us a test of that low volume node and the 2900 at some point today. That's the very likely action. Why? Because I expect the market to stabilize a little bit, to catch its breath, so to speak, before it decides on the next move, which may be lower. We've skipped through the key point of control of this balance zone, but it doesn't mean that it cannot continue lower. And there's some big areas below, as you see in orange. The secondary scenario is one that pushes down, attempts to push down, impulses up, takes out the overnight high, tests at 2,900, and then actually consolidates before it pulls back and pushes through, and then starts to work its way back to 2,908 for today. So I'm expecting this to be an opportunity. I'm looking for an opportunity for buyers to step in and start to buy up bargains. We have to keep an eye on the VIX to see if the market's still buying insurance to the downside, but overall, that's the expected action on scenario two. Scenario three, as you will have guessed, is an open that tests up and then drives down as selling continues, as the market continues to be nervous. And then in that case, we have a similar scenario where we would not want to fade or buy a drive down. And the key targets below are 55, 28.55, and 28.47, as you see here in these stock zones, these two stock zones. I do expect the range to compress a little bit. We've lost about 110 points over the last 2 days, close to close. And that's quite a bit for this product. So I am expecting some sort of balance or recovery. The market tends to move to where it believes value is, and then tends to go into a holding pattern to give itself a chance to evaluate new information. And new information is coming in all the time, whether it's economic releases, tweets, whatever. Okay, so that's where we stand today. The performance so far on the short side has been fantastic. It's been hard to catch, but it was, we talked about it on Monday. It was quite obvious from the auction that this is what's coming, and it's gone a lot farther and a lot quicker than expected. I'm watching the order flow very closely. I'm very tempted to scalp all the time because this is the kind of action that I'd love to scalp. But with volatility comes opportunity, but also comes risk. Just mind your stops. Don't get caught up, and don't try to pick a bottom. Let the market tell you what a bottom when a bottom's been put in. And we've talked, if you're a Convergent member, go back to the study hall video from a couple weeks ago, where we talk a little bit about what the order flow might look like when the market is starting to stabilize. Good luck today, and I'll catch you tomorrow morning. Take care.